you know, whose class just stares back. It's all sad. Anyway, thank you guys for joining us for our inaugural Lift the Rock program. We are super excited about this great new networking and traction-based opportunity for our entrepreneurs. The whole idea behind Lift the Rock is that we're going to connect the entrepreneurial community with the business community in a way that is designed specifically to foster traction and growth. Nothing like this has really ever happened in Central Arkansas before, so we're very excited that we're getting this started today. And in a few minutes, we're going to kick off with our very first presenter, Emmanuel from FundSeeder. He's super pumped about it, you can tell. Okay, so quickly, how does this program work? Every week, we're going to start with an initial pitch by an entrepreneur, 5 to 6 minutes, and it's going to be all about growth, right, and traction, and what they've been doing and how we can all grow. Okay, and then after that, we're going to have a really interesting way for the community at large to get involved with each individual entrepreneur. I'm going to talk to you about that after the pitch. And then we're going to have a celebration of success. You may have noticed the gong over here. It's going to be incorporated into our Lift the Rock program. We're affectionately calling it Lift the Mallet. And if you have a fantastic traction event, if you've gone out and landed a $5 million contract, then you're going to let Ashley know ahead of time, and we're going to have you slated to ring the gong. A lot of fun. We're looking forward to incorporating that into every Wednesday morning if you haven't heard this gong. Anyway, okay, so doing a good job with my slides. So for those of you who have not been in the space much and do not know, we have awesome gigabit Wi-Fi. You should hook your phone up to it. The password is Real Ventures. If it doesn't look like it's working initially, that's because it works kind of like hotel Wi-Fi. You've got to go to a splash page and say, yes, I know I'm on your Wi-Fi, and then you move on and it works like gangbusters. We need to give a special thank you to our community, Little Rock Regional Chamber of Commerce, for all that they've done for us, and also for Janny King. Janny King comes in and keeps our space nice and clean for us every week, and if you have any janitorial needs, by all means, we're happy to share that contact with you. Another special thank you needs to go out to our community champions. Not all of them are in the room with us today. Elise Stroud happens to be out making sales, so she'll be back to ring the gong soon. And John Foley, and then Walter Burgess. Raise your hand, Walter. Whoop, whoop. Social media. We appreciate a little bit of love on social media. What you're going to do is you're going to follow the Venture Center. If it's on Twitter, it's @Venture Center. If it's Facebook, it's The Venture Center. But regardless, the hashtag that you're going to use is Lift the Rock. Program's called Lift the Rock. Hashtag is Lift the Rock, and we're ready to go. So, well, it's all you. You ready? Are you on? It's on the other side.
Thank you.
Okay, that's all you.
Thank you, everybody. Good morning. To be here at the inaugural Lift the Rock presentation. I always like being first at anything, so I don't know if it was by design or just a coincidence. So my name is Emmanuel Bollari. I'm the co-founder and CEO of FundSeeder. And FundSeeder is a company that's looking to disrupt the hedge fund industry and the hedge fund monopoly. Cool and interesting is that here we are in Little Rock, Arkansas rather, and talking about disrupting Wall Street. So I think, first of all, what Lee has done at the Venture Center and bringing us here, and Gary is just an amazing testament to what they're doing. But the founders who are involved in FundSeeder, we have deep domain experience. So James Bibbings, who's in the audience, has run one of the largest and most successful regulatory consulting firms in the hedge fund industry. Myself, I've ran a multi-manager fund where we've allocated to hedge fund managers and over $300 million of capital. And then our resident expert, and I would say CNBC guru, who was just on CNBC about a couple weeks ago, Jack Schwager, was the director of research on Wall Street for Prudential in the 80s. He's written over 2 million copies of his books have been sold, and it's been reprinted in 15 different languages. So from the founding side, when we're talking about disrupting an industry, we come in with deep experience that I think makes what we're going to present quite relevant. Problem. And when we talk about monopolies, it's one of the things when we look back at our history books, perhaps you might think it's something from the old days, right, with U.S. Steel and Standard Oil. But the hedge fund industry today is a monopoly. If you consider about a recent report that came out which mentioned that of the $3 trillion under management in the hedge fund industry, 88% of that money is controlled by less than 700 hedge funds. And so that's a problem, and really that's also a monopoly. The current response is, of course, when you have a monopoly, you have high fees, really a lack of choices in product, and ultimately underperformance. So you can see a quote there from the New York Pension leader that's allocated to hedge funds. They're not putting up and they're not tolerating these underperformance of these hedge funds, and they're looking to pull their money out of the hedge fund industry. At the core of this problem, of course, is a lack of access. Stephen Cohen, who runs a family office of around $12 billion, said, look, we're surprised that there's a lack of talent. We can't really find any good hedge fund managers. And so what we're doing at FundSeeder is we're attacking this problem like any problem where there's a lack of access. In this day and age of financial innovation, of the free flow of information that you can find online and the readily available access to technology, the one question you have to ask yourself is, are the brightest money managers, the brightest traders from Wall Street? I don't think that's the case. But the problem is that there hasn't been an opportunity for traders globally to even have a chance to compete. So what we're doing at FundSeeder is we're creating an end-to-end solution to discover, cultivate, and distribute new hedge fund managers. So a relevant way of kind of explaining what we're doing is we're building a baseball farm system for the next generation hedge fund manager. And there's nothing out there currently. And so part of the process is, from our technology aspect, is we want to open up and find these traders globally, wherever they might be, and it becomes a statistical game. Not everybody who has an aspiration to be a Major League Baseball player is going to make it. Opportunity, what we think then becomes is we're leveling the playing field and we're creating an environment where managers that are talented globally can compete against the established status quo. What's the situation with the current hedge fund investor today, and what is the opportunity? Hedge funds today, investors today, of the $3 trillion are typically institutions, they're family offices, ultra high net worth investors. And as I mentioned earlier, they're really frustrated with paying high fees and putting their money with underperforming hedge fund managers. But the problem is they don't have an option, right? So when they're allocating money in a traditional sense, these investors have allocated to stocks and bonds. So the reason they're allocating to hedge funds is this provides them with a diversification to the current portfolio. The question these investors are asking is, what's going to happen when this bull market is no longer going to be a bull market? When we're in a zero interest rate environment where we have our own internal mandates where we have to actually generate returns. And so they're looking aggressively for these performers, these star hedge fund managers. And so now there's been a shift. Emerging managers, who's the new up-and-coming new generation of talent. So in my day-to-day conversations with these investors, and we've talked to university endowments, we've talked to public pensions, we've talked to family offices, they're desperate for a new product. But the problem is you can't find it. And so now but there's a greater demand and a greater adoption of what we're going to be producing. And I talked about a desire for lower fee products and better investments. Well, when you're charging these high fees in the hedge fund industry and there's a monopoly, you can command those fees and say it's status quo. So when we're offering choices and those fees ultimately go down, and that is a better investment for hedge fund managers. Is operational and infrastructure due diligence. So even though these hedge fund investors might find talented traders, it has to work within a proper regulatory and infrastructure environment. The problem is these traders can't afford it, and that's what we are also looking to provide in terms of the end-to-end approach. As we find these traders, we're providing them with the infrastructure that then makes them sellable to the hedge fund investors. next sort of where the industry is going is the millennials. So we're talking about the largest wealth transfer of any generation that is happening with the millennials. Well, we know a few things about millennials, and these studies have been out there. Is number one, they're not going to tolerate underperforming investments. Number two, they're not going to tolerate high fees, and they're not going to tolerate the way the hedge fund industry currently works, which is a lack of transparency, and you take it or leave it. This is what we're doing. So there's going to be a tremendous demand for innovative hedge fund product. And what I mean by innovative hedge fund product, I mean investments that have an opportunity to make money in up and down markets where it balances out their stock and bond portfolios. And we believe that millennials are not going to tolerate, like I mentioned, the hedge fund investments of the past, and you're looking for something that's innovative. The market size and what is the opportunity? Well, there's two sides to it. On one side, US alone, and this is an outdated study, there's over 40 million self-directed traders in the US. In other words, people who have a brokerage account online and are professionally or on a personal level passionate about investing in the markets and trading actively. So 40 million, and consider the fact that only 668 hedge funds control 88% of those assets. And on the other side, there's over $3 trillion of hedge fund assets under management. And so what FundSeeder is doing is we want to bridge that gap. That is untapped for obvious reasons, and we think there's tremendous potential. One way of describing the market size on the trader aspect of it is a statistical game for us. And so if we believe there are, of the 40 million, perhaps 1% traders, right? In the same way, if you're a really, really good runner and you train and you practice, you might be able to run a 6-minute mile. But to make it to the Olympics, you either have it or you don't. And we believe that's the same case with trading. So for us, if you consider the market size, it's a statistical game, and we feel that's going to be our advantage to transitioning in terms of the assets under management. Now, well, first of all, the technology is available. Not only is available in terms of we truly believe some of these traders that we've met and we've traveled the globe finding these traders are talented and in fact superior to what's out there. But the technology is available for us, for FundSeeder, to track these traders and build this farm system, if you will. The second thing is investors, as I've alluded to earlier, are opening up themselves to new and innovative ideas, especially in the light of underperformance, a zero interest rate environment, and perhaps looking forward and saying, well, what's going to happen if the stock market stops performing or I'm losing money in bonds? What are my alternatives? And lastly, if we consider the millennial group, they are looking for choices and options. So we're seeing that trend, whether it's robo-advisory, whether it's peer-to-peer, whether it's a do-it-yourself mentality, the market is receptive to that. So our current competition, we talked about it. Pure and simply, it's the monopoly, the established hedge funds, the large traditional banks, the brokerage firms, the status quo. And they haven't changed, they haven't adopted new changes in a sense, and we're looking to we think, compete tremendously against these competitors. Product. So over the last, I would call it a year and a half, we've spent money and resources building out the product to be able to track these talented traders. And from a value-added perspective, we want to be able to give them a product that helps them grow. These analytics that you see are just one of the shots of our fully functional database, which not only gives us insight to perhaps a trader from Asia or Europe in terms of how they're performing and how they're performing relative to their peers, but also it gives the traders analytics and metrics that they don't have elsewhere. Our current traction. So is this an idea that will work? Well, we think so. With limited marketing and virtually a zero marketing spend, we've received over 5,000 trader signups from over 120 countries. So on the trader side, that tells you the tremendous demand, a frustrating point of barriers to entry to be able to grow and break into this industry. We have an established platform, analytics, fully functional. We believe some of our analytic platforms that we're providing and performance patterns for our traders in our community are cutting edge. We've received feedback from established brokerage firms in the industry who have if we want to white label our solution. We've established connectivity with brokerage firms, independent brokerage firms. A few of them are mentioned there: Interactive Brokers, TradeStation, ADM Investor Services. And we've registered our sister company, which is FundSeeder Investments, which allows us to actually raise money for these traders that we find in a properly regulated structure. So what is our pathway to monetization? So we have two steps. The first step is if we find the talent, right? So if you consider us almost as talent agents, we know from our domain experience that investors are desperately looking to find this talent. There's a lot of money out there, but there's not a lot of good talent. So phase one is we're simply making the connection and introducing investors to these traders. And as a result, because of that connection fee, we're able to share anywhere from 20 to 30% of the management fee and the incentive fees for these connections. Step two, we want to create a FundSeeder family of funds. So the idea there is if we are controlling this end-to-end process from the life cycle of finding these traders to distributing the products, we can have a much more robust and competitive offering for investors. And so we want to have a fund family to distribute. My name is Emmanuel Bellari. I am the co-founder and CEO of FundSeeder. And I invite you, if you have any other questions, to talk to me about how you could join us in disrupting the hedge fund industry.
Thank you.
Thank you.
Okay, so Ashley is going to bring a mic up and put it over here. You guys have questions, right? Bring your question to the mic. James has a question.
Very excited.
First, you're going to be going forward.
I'm interested in knowing a little more about the 5,000 traders that you sent us. About the other side of that, their fees.
Sure.
How far along have you gotten on that, and what kind of reaction are you getting to that request of monetization?
Sure. Good question, James. So the question is, a little bit more about the traction from the trader side of how many have signed up, and then also, are the traders willing to share the fees with us? So the traders that have signed up fall into two categories. We have traders that are signing up that are currently trading at a certain brokerage firm that is not compatible with FundSeeder, and then those that are trading at a firm that is compatible in terms of we can actually track their data and their numbers. It's actually been quite fascinating in terms of the breadth of the talent. When we look at these traders who are signing up, it's ranging from, non-professional traders. I mean, it could be, we have an Olympian who signed up. We have an Uber driver. We have an analyst, all the way down to professional hedge fund managers that left Wall Street firms and are good at what they do to capital, right? Because when you transition to running money, it's a business in a sense. And they're looking at us for providing them with the ecosystem to be able to raise capital, because all they're good at is trading, and that's the way we like it. Industry norm of the 20 to 30%, that's a third-party marketing fee, and that's normally the case for anybody who's trying to raise money for an established hedge fund manager. So we're not doing anything out of the norm in terms of fees. If anything, we're providing these traders with a lot more that most third-party marketers are not providing. I believe on the FundSeeder investment side, we've already locked up and have contracts with about 8 traders, and they're receptive. I mean, I think if we even asked them, we want to take 40% of the fees, they'd probably say yes, because they have no options. I mean, they literally have no options. They're just really good at what they do. And when we're providing them with this opportunity, it's tremendously receptive. And we've received countless emails from these traders that say, thank you for this opportunity to be able to even compete against the big guys. So the trader side is extremely receptive, and we think it could grow. Spend, I think the conversion rate, the last time we looked at it in terms of people who come to our website, is around 17 to 20%.
Somebody else has a question. See it on your face. I don't know what's happening. Just take mine.
Okay.
Also, you don't need one.
This one's also not working, but I'm just going to talk pretty loud.
You could talk and I'll repeat the question.
Okay, so you had mentioned a couple times in your presentation that there was a desire to look at alternatives aside from stock and bonds.
Yep.
What types of alternative investments are your traders? What kind of stuff are they working on? And then follow-up question to that, what kind of regulatory oversight are you guys dealing with?
Sure, it's a very good question. So the first question was, what type of alternatives? I mentioned that as a diversification allocation to stocks and bonds are we talking about? And the second one is, what are the regulatory oversight that we're working under? So alternatives, by definition, is anything that is not stocks and bonds. And within that, it could be, you know, it could be illiquid securities, you could say venture investments. Talking specifically about investing in the hedge fund industry, where these money managers are trading highly liquid markets, either stocks or bonds or futures or Forex, but their strategies provide them with an opportunity to make money in up and down markets. So they're not long only, they're short. They could implement, you know, arbitrage strategies. And the sort of the Wall Street term is they're generating alpha. In other words, they have an ability to generate returns that's above your S&P 500 index. So when we're talking about it, it's you're placing your money in a simplistic way with a money manager that if he wakes up tomorrow morning and the S&P 500 is up, he doesn't care because his strategy gives him an opportunity to make money regardless of where the market's moving. From a regulatory perspective, that's a really good question. And that's why we have these barriers to entry, and that's why we have the current monopoly, because the regulatory hurdle was huge. So one of our co-founders, James Bivings, who's in the audience, you know, is our regulatory expert. He used to work for, you know, the NFA, which is a regulatory body under the CFTC for futures and equities. He runs a compliance firm that structures it. So the way we've set up our company is we have two companies. The first one is FundSeeder Technologies that allows us to track these traders. And then we have FundSeeder Investments that's fully regulated with the CFTC that is able to talk to investors and make sure that we are within the regulatory confines. So if any other company out there that said, would like to do this idea and let's just put it together, expertise, it'd be difficult.
Great answer. Who else has a question? That guy has a question.
Sure.
Be loud.
All right, so the way it works is these traders sign up, they trade like they normally would, and you track it, and then they look for like an offer to make or something?
Yeah, that's right. So it's a broker agnostic model, right? So if a trader is trading at Interactive Broker or they're trading at whatever other brokerage firm is around, TradeStation, ADM, Investor Services, they can sign up to FundSeeder and we track in their daily data. Now, when we talk about the trader life cycle to attract all traders, so think about like the minor league example, like somebody who could be in high school, the equivalent would be a trader who just learning to trade, or he wants to be do it yourself and he just signs up, all the way to these more established people that are ready to manage money. So once they sign up, we pull in the data and we're tracking them. And the traders not only get these analytics, but they also are able to see where they stack up against the different competitors in whichever different category they might be trading. So if a trader says, I'm trading, you know, the stock market from a value-oriented approach, like a Warren Buffett, right? They could find out those different segmentations. And then at that point, where it ties into the regulatory part of it, if they're not regulated, then they can't hold themselves out and solicit capital and say, hey, we want to raise money. But FundSeeder is in the middle of it to help them with that process. And so we then, you know, make sure they get properly regulated, properly structured, where then they can move along to AA, AAA, and then they're ready for the investor allocation. I mean, we're just leveling the playing field. We're not going to guarantee that if you're going to sign up to FundSeeder, you're going to be raising money, but we're giving that opportunity. Free. Yeah, it's free. So it's free for traders, which is a calculated bet we're taking on that our business model is not, at this point, making money off the traders. It's finding the talent, because then it scales.
Walter, yours is the last question.
So since you're cultivating, 1 in a billion traders,
Yeah.
what's the average and the maximum return on investment that your traders are generating? Whatever metric you want.
Yeah, so in terms of, what's the average, or what's the sort of the profile of the type of returns these investors are making money? I can't answer that question, but I'd be happy to show you like just a demo. And the reason being is, you can imagine the first adopters that have signed up to our website, right? But there's a certain bias to that, because they wouldn't be signing up if they weren't putting up these type of returns. So do we have, the better, I think, phrase question is, do we have traders that are outperforming all these hedge fund managers, the indices, and so forth? The answer is yes. Equally, there are traders that might be in the minor leagues that are signing up that are underperforming because they're not quite yet ready, but they're honing their craft to learn from even their mistakes. So it's a balanced opportunity set. But at the end of the day, it's a statistical game, right? So the last analogy I'm going to give is, if it's like a gold rush and we're staking our claims globally, some plots are going to be just a wasted piece of land that we spend money on, but then we're going to find other traders that are just payday. I mean, these guys are just brilliant and the next multi-billion-dollar hedge fund manager, and that's our goal.
Great, thank you.
Thank you.
So wait, that eye's not working. This is the amplification nightmare today. Okay, so in the presentation part with the same question every week, and this is how you guys have a really awesome opportunity to get involved with each of these startups. So the question is, for you guys, who do you know that a manual needs to know? So that's not a hypothetical. I'm about to give you some serious action. Ashley has pens and cards. I would love for you to get out a business card of yours and just write down the name of somebody that you can commit to introducing to a manual. And if you don't have a card, we'll hook you up with one of ours. Pen or a card? Something. A pen. We need pens over here. So I know it's a little hard sometimes to come up with somebody off the fly, right? But I think as we move forward in this, it'll be a great way for us to connect the business community and our own personal network with entrepreneurs that need to know them. And those people might need to know the entrepreneurs. Maybe they could be a client of Emmanuel. Maybe Emmanuel needs to just know them because they're very well connected. Maybe they have kids the same age. I don't know. It could be all manner of things, Lee.
So, Emmanuel, what kinds of people do you need?
Yes, who do you need to meet?
It's a very good question. So, potential investors in our company, we've raised some money and are looking to scale. And then any investor that sees the opportunity of what we're doing from a investor in the space. We just love their input. We love to kind of resonate it and bounce it off them. And then if you know that trader, that like brilliant off-the-cuff trader from Little Rock that wants to be discovered, that's the other aspect of it as well.
Anybody else need a card? Okay. Well, we're going to keep working on the card part for just a second, and then we're going to collect those. But meanwhile, Lee is going to come up and talk to you guys about this program for just a second. And he might have to do it without a mic, because I don't know.
Test. There we go. Awesome. So if this is your first time to Wednesday morning program, raise your hand. Well, that's awesome. So we started this Wednesday morning program about 2 years ago. It was the first program we started with the Venture Center. And at 1 million cups in January, we said that we had taken feedback from those that had come and that we were going to be making a change. And we wanted to drive even greater value to the entrepreneurial community. And that's Lift the Rock. And so we're really excited about this. Now, I wanted to say we got a lot of feedback on, let's call it Launch the Rock. This is a really good distinction. We don't want to be about launching things. We want to be about revenue and traction and building real businesses and not having people come up and pitch that have a great idea. That's cool. That's the first step. really take these businesses and get them to the next level. I thought Gary said that's scary. I'm like, he's like, no, this is Gary. So what's really cool about this, two things. One, we're going to be talking about traction. Who can we introduce you to? Who can the community introduce you to? Let's get some sales, right? What does a startup need? We need revenue. The second thing is we're going to start through the sponsorship with the Little Rock Chamber, begin to connect the startup and the entrepreneurial community together with the established business community. Now, I'll say that in the first 2 years of launching the Venture Center, for the most part, the business community has sort of taken that sideline seat. Let's kind of see what this thing is and see if it sticks around. And we're going to announce our 2-year numbers in a few minutes, and they're awesome. And so we think now's the right time to bring these two business communities together. That I want Tina to come up. Zuni Learning Tree. Tina, awesome job building Zuni, getting customers, and Tina's got an announcement she's going to make.
So I have to really thank the Venture Center. I went through a pre-accelerator program, a little over a year ago now. Yes. And the connections that I've made through here have been amazing. So they actually brought Mark Hillen, who was a great mentor and helped us to begin raising money. James Hendren, who's helped amazingly. And so we've just raised over 1/3 of our open round, and we're super excited because it's allowed us to build. And we met Matthew, who's our CTO here. So I'm going to gong for a lot of things: great money, great connections, and great growth for our company.
Awesome, Tina. Great job. All right. So now this next one's going to be really cool. So if you're Venture Center staff or a mentor, I want you to come up and get behind the gong. And staff. Accelerator folks, you're all members. Come on. Yeah. Which is awesome. And we'll convert everybody else. That's right. Can y'all separate the C a little bit here in front of the TV? Closer to the gong. All right. So in 2 years since we launched the Venture Center, you all and the rest of our members have created 153 jobs. Before. We have trained 56 of the top business leaders in Central Arkansas, and they've done 389 mentor sessions. $6.78 million of seed capital invested into a handful of early stage companies. So, good job. Keep it up. If you've got something that you want to ring the gong and announce, customers, sales, capital, new hires, something significant with growing your business, we want to have you do it.
Great. Thank you. And thank all of you. I mean, your hard work has been amazing. So, okay, that about wraps us up for Lift the Rock this week. Next week, we'll feature Akuba. They are a small business loan platform. I'm going to get it wrong, and Chris is going to come out from the other side of the wall and correct me. In any event, Akuba's awesome, and they have these great T-shirts, and you'll see them next week. Also, we're actively seeking breakfast sponsors for this event. We would like to have breakfast here every week, which makes me say, please direct your attention to that wall where there is a little bit of breakfast and there is a ton of coffee in the other room. Feel free to hang out and network, and we'll be back here same time, same place next week with Akuba.